Escrow Out Loud is a weekly podcast about San Francisco real estate from the Jackson Fuller team, San Francisco Realtors since 2002. Show notes with links are at jacksonfuller.com. Hi, Britton.
Hey, Matt.
How are you?
I'm doing great. It's a few days till Thanksgiving. It's a beautiful day outside, and we are here to talk about
Bridge loans. Because you've got to drive over a bridge to get a loan now in San Francisco. No, just kidding. That's a horrible joke. As kind of the real estate year has been winding down, we've been talking with lots of folks that are thinking about selling here in the city. But before they sell, they want to buy their next place and have some certainty about what they're going to get and be able to move into it so that they can do any work and staging on the place they're selling. And that is what a bridge loan makes possible these days.
And not just everybody knows how to put together a bridge loan.
No, it's not a product that everybody offers.
But we are lucky enough to have with us today the lovely and talented Tracy Andreini, a sales manager and senior loan advisor at Opes Advisers. And Tracy, we would thank you for joining us, and we would love to just hear, brag about yourself. How long have you been in the business, and what's your expertise, and anything you want to tell us?
Okay, thanks, Matt. Thanks, Britton. So I've been in the business about 30 years now. I've been with Opes Advisers for about 10, and I'm the sales manager for San Francisco office and senior loan advisor. And Opes Advisers is, we have our own retail bank. We're part of Flagstar Bank. And we're a mortgage bank, and we're also brokers as well. So that just gives us a lot of flexibility when it comes to product offering and rate.
Awesome. And we have been working with you and had mutual clients for probably over a decade now. Time flies when you're having fun. So, and the reason we asked you to come talk about bridge loans today is because you've actually been doing some of these for our clients recently. And until I was able to hop on the phone with you and kind of get an understanding of them, I didn't really understand kind of all of the moving pieces that were involved. And since I've gotten a lot of questions about it lately, I was kind of hoping that we could chat a little bit about bridge loans today.
Absolutely, yeah. So the nice thing when we joined forces with Flagstar, one of the things that we mentioned to them where we felt that there was a shortfall in our industry was people wanting to be able to buy before they sell. Before the meltdown, there was a lot of flexibility, as we all know, with guidelines. So it was really easy to be able to move up in property without selling first. So we found that that's probably been one of the biggest issues when it comes to lending. So the good news is that we not only have a bridge loan, but we have a portfolio program as well that helps clients achieve that. So but just a little overview here of what a bridge loan is. Basically what it is it's a temporary or short-term loan that allows you to tap into the equity of your home, your current home, to be able to buy before you sell. And the benefits of a bridge loan is that allows you to be able to buy before you sell, allows you to go in with a non-contingent offer. And we also are able to go ahead and have this fully underwritten upfront. So that way, when you're going out there and shopping for a home, you know that you've got all the funding, secured, all the financing. So, okay.
Absolutely. And I think that one of the parts people are attracted to in this scenario is that in a world of uncertainty, when you're, planning on selling and planning and buying, there's a lot of pieces up in the air. The bridge loan is kind of some certainty, about what you can do next, what you can get out of your current property. And there's just a feeling of solidness with it, I guess. Does that make any sense?
Yeah, absolutely. So what we've found where it really benefits clients is, like you said, it allows you to be able to buy before you sell. And bridge loans tend to be a little on the high side when it comes to pricing when you compare it with a traditional 30-year fixed loan. And the thing to remember is the reason why they're priced higher is because it's a temporary loan. But when you break down the numbers, it still works out to be more cost effective to go ahead and do bridge financing first before you sell, because it allows you to be able to move once It allows you to be able to buy something so you're not selling out from under you. And it also allows you to be able to vacate your home that you're looking to sell and be able to stage it. So we find that there's just a lot of benefits in being able to buy before you sell, and it just takes out a lot of anxiety for our clients as well. I think that's probably where most clients have the most anxiety, is when they're looking to buy up with property, and this just helps alleviate that. So a little bit about bridge loans. So what the banks are basically looking for is, once that bridge loan is in place, that you still have 20% equity in your home. So it's basically tapping into the equity that you currently have in your home. The nice thing about the bridge loan too is there's no monthly payments.
So Tracy, I'm going to slow you down here for a second, because you're like a mortgage pro and you run through these every day. But for our listeners, what that means is the current value of their mortgage plus the value of the bridge loan couldn't exceed 80% of the current value of their property.
Correct.
Okay.
Correct.
Okay. So obviously, if you bought last year with 10% down, this probably is not a product for you.
No. No, definitely not. So,
and you'd also said it's short-term financing. So when you say short-term financing, kind of what's the typical period for a bridge loan?
yes. So basically what a bridge loan is it's a short-term loan that allows you to tap into the equity of your current home to allow you to buy before you sell. And the term typically for a bridge loan is 6 months. They will, with exception, extend that amount of time. But what we've found with most of our clients is they've sold their home typically 1, maybe 2 months after they've purchased their new home. And again, just to go over the benefits of the bridge loan, you can go ahead and write a non-contingent offer. It allows you to move one time. We can also fully underwrite the file, so that way, you can go in with a strong non-contingent offer when you're looking to purchase your new home. Okay.
And you mentioned, I wanted to, if I could go just highlight what you said about how there's no payment. So how does that work?
Okay. So with the bridge loan, there's no monthly payments. And the benefit there is it just gives clients a bit of breathing room to be able to buy before they sell. So say if we have a client right now that's looking to close on their loan in November, right? Their first payment date isn't going to be until January 1. And then with the bridge loan financing, there's no payment from that bridge loan either. So that client is going to only have their current mortgage that they're going to be paying on until January 1. So they have, again, a little bit of breathing room there. The bridge loan payments are collected. The interest on that loan, it's an interest-only. Well, it's not even a payment. The interest on that loan is collected once you sell your home. So our bank will collect out of the proceeds of the sale the loan amount, and then what's owed on the payoff, and then the interest that's owed. So say, for instance, if you were looking to buy a $1.8 million home and you were looking to put 20% down and you had sufficient equity in your departing residence, you would be able to get a $360,000 bridge loan, and that bridge loan would allow you to put 20% down on the new property. So the only out-of-pocket costs you would have typically would be your 3% initial deposit and then your closing costs. And this allows you to be able to move into your new home without having any out-of-pocket costs, because you're tapping into that equity that you have in your current home. So if we go back to the example of, $360,000 bridge loan, the interest rate on a bridge loan is prime plus 2.5. So currently you're looking at an interest rate of 7.25%. The monthly payment, the interest, I shouldn't say the monthly payment because there is no monthly payment, but the interest that would be due per month on that loan would be $2,175. So you can see, even though it's a higher interest rate, it's 7.25%, it's still more cost effective than someone first selling their current home out from under themselves, but also it's more cost effective than having to move twice. paying that interest on that bridge loan. And also it allows you to be able to go in and stage the property or do any repairs that are needed on the property, so that way they can get top dollar on the sale of their home, because they're not living in the home. They're able to move into their new home and allow you to stage their home so they can get top dollar on their listing.
So I had someone ask me, what's the difference between a bridge loan and just getting a regular equity line?
The bridge loan follows the guidelines of the first mortgage, so there's more flexibility in underwriting there. The other issue with a HELOC, so if someone currently has a HELOC, yes, you would just go ahead and tap into your HELOC. But what happens is a lot of clients will come to us and they don't have a HELOC in place. If you're looking to put a HELOC in place right now with the current volume, with interest rates being so low, you're looking at anywhere from 60 to 90 days to put that HELOC in place.
Oh,
or
wow.
a bridge loan, so say if you can't, yeah, exactly. If you find the perfect home right now, we can move fast. We can do a 21-day close or faster if needed, but typically we're doing 21-day closes on the purchase with that bridge loan in place as well. The other issue with the HELOC is if you've got a current HELOC in place right now, then fine. But if you're applying for a HELOC, what the issue that banks have is that would be an owner-occupied HELOC on your home, and then you're turning around and buying another owner-occupied home. So there's an issue with occupancy there, because the banks don't allow you to have two owner-occupied loans that close pretty close to each other on two different properties. So that's the issue right there. So.
It's almost like lending standards matter now.
Yeah, exactly. Oh, the other issue with the HELOC is when you're qualifying for the loan. So with a HELOC, if it's a brand new HELOC, most lenders will take 1% of that line amount in qualifying you. So you have to count 1% of that line amount. So say, for instance, if you had a $360,000 HELOC, 1% of that, they would need to count $3,600 a month in your qualifying ratio. So that makes it a little difficult to qualify for your new home, your departing residence, and the HELOC. Okay, and that's if it's a brand new HELOC. There are some lenders that have a little bit more flexible guidelines, but they're still going to hit you with that payment of the HELOC. On the bridge loan, depending on the investor, if it's a Fannie Mae or Freddie Mac loan, they do not count the bridge loan payment in your qualifying ratios. And on our portfolio loan, we do not count the bridge loan payments in that qualifying ratio. So it allows you to be able to qualify for more home versus if you had a HELOC in place.
It sounds like it's magic.
It kind of sounds like a bridge loan is the way to go these days. And I just wanted to circle back to something you said a moment ago, which was you're able to do these in 21 days. And that is a true story because you just did one for us in 21 days. And even though bridge loans have a whole lot of moving parts and pieces, you and your team were just amazing. So thank you.
Well, if anyone needs to get in touch with you with questions about bridge loans or to apply for one, what's the best way to reach Tracy Andreini?
Best way to reach me is on my cell phone, 415-609-2440.
Once again, for the people in the cheap seats.
You want my number again?
No, I'm just kidding.
Sorry.
So back to bridge loans for one more second here, Tracy. Bridge loans sound like they have a whole lot of moving parts and pieces. Kind of how many appraisals are required? And is there anything else that's kind of different than the normal process or to be aware of?
Yeah, so good question, Matt, about the appraisal. So it depends on your equity in your home. So if your combined liens are less than 60% of the value of your current home, we only need a drive-by appraisal. If your combined liens, including the bridge loan financing, exceed 60%, then we need a full appraisal. However, we still may need a full appraisal depending on the product we need. So the nice thing about Flagstar and Opes, we have our portfolio product that I helped work on with the guidelines, and we do not count the payment of the bridge loan, where you'll find with other investors they do count that bridge loan payment. So it allows us to have a bit more flexibility in qualifying for the new property. And the other piece with our portfolio product, where we would need a full appraisal for, is that they allow us to use a rent schedule to show what the market rents would be for your departing residents. So if needed, we can go ahead and use market rents that's outlined on the appraisal to offset your departing residents' principal, interest, taxes, and insurance, your PITI, which is great.
I did not know that. So what happens, you mentioned earlier that it's a 6-month loan product. What happens if the house doesn't sell right away? Is the bank known for giving exceptions to like, oh, we'll give you 2 more months, or what happens?
That's a good question. We will grant an extension on that bridge loan. The good news is, I'd have to say probably just under 50% of my business is bridge loan financing, and all the loans that I've closed, only one client has needed an extension.
Wow.
What we found is most clients have sold their home 1 to 2 months after they've closed on their new purchase.
So, and I actually think that's also a really kind of great point, because one of the issues that the bridge loan solves is if you don't know what you can buy next, then you're, as a seller, super focused on absolutely making sure that you not only hit kind of your number, but you get as much as you possibly can, because you're like kind of stocking the war chest for what's next, which is not to say that like in any sale, we're not trying to get our seller the most possible amount of money. But if you've already bought and you know what you need to make that happen, then as a seller, it gives you the ability to be more realistic about what your property may be worth and sell for, versus feeling like you've got to, unrealistically perhaps get something more for it because that's what you're going to need to get your next place. Does that make any sense?
Yep.
All right.
Yeah, it just takes a lot of anxiety away. I mean, that's what I find when most clients call me. They're not aware of this product. And it's amazing. I mean, like I said, this was the thing that we went to the head of our bank and said, this is what we need. This is where we're seeing the biggest pain point for our clients, is not being able to buy before they sell. And that just presents so much anxiety for clients. I mean, who wants to sell their house out from under them? Or who wants to try and sell their home while they're still living in it? And the nice thing about the bridge loan, this just gives clients so much flexibility to be able to find the right home without feeling that there's this pressure because they've just sold their home and now they're stuck living in some short-term rental, just desperate to find the next home, desperate to find their next home before property prices go higher.
And
it just gives clients a lot more breathing room to be able to find the right home and be able to sell their home without just that added anxiety and pressure.
And often when they're in that short-term rental, they're not super happy with their realtor at that point. So, thank you for making our lives a little easier as well. So we have covered a ton of ground here. Let me see if I can kind of wrap this up in 3 bullet points for our listeners. First of all, if you're thinking of selling, you want to buy your next place before you sell, HELOCs, home equity loans are not the solution these days for a variety of reasons. Number 2, bridge loans. Yes, they're more expensive than a 30-year mortgage, but they offer a lot of certainty and comfort throughout the process, which most people find makes it more than worth what they're going to pay. And your products, because you are both a bank and a broker and a portfolio lender, do not require making bridge loan payments and have some other nice flexibility pieces as well.
Yeah, pretty much sums it up.
So, Tracy, you've taken a ton of time out of your schedule to chat with us and our listeners today. We know you are a super busy mortgage broker here in San Francisco, and we appreciate all that you do for us. So once again, if you didn't catch her number earlier, it is 415-609 2440. And thank you so much for joining us to talk about bridge loans today, Tracy.
Thank you, Tracy.
Oh, thanks, Matt. Thanks, Britton. It's my pleasure. I'm just happy to, be out there and help educate our clients on what their options are.
We're so glad that we work together so often, and we'll send you more people soon, hopefully for some bridge loans.
Sounds perfect. Okay.
Awesome.
Thanks, guys.
Escrow Out Loud is a weekly podcast about San Francisco real estate from the Jackson Fuller team, San Francisco Realtors since 2002. Show notes with links are at jacksonfuller.com.